Ladies and gentlemen, good day and welcome to the Inox India Q4 and FY25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you and over to you, sir.
Yeah, thank you, Shruti. Good morning. On behalf of ICICI Securities, I welcome you all to the Q4 FY25 earnings call of Inox India. Today, we have with us from the management, Mr. Deepak Acharya, CEO, Mr. Pawan Logar, CFO, Mr. Sunil Lavati, Investor Relations. We will begin with the opening remarks from the management, which will be followed by Q&A. Thank you, and over to you, sir.
Thank you, Mohit. Good morning, everybody. Dear shareholders and investors, a very warm welcome to our earnings call for the fourth quarter and financial year ended March 31st, 2025. Our results, investor presentation, and press release are available on the stock exchange as well as on our website. With the belief you had the chance to go through it, I will go through operational performance for the quarter in detail for all the segments that we are present in. My colleague and our CFO, Pawan Logar, is with me on this call, and he will take you through financial performance, post which we will open the forum for questions and answers. India's economy continued to stand out among emerging markets, maintaining strong momentum even as the global growth moderates. For the second consecutive year, it's poised to be fastest growing major economy in the world, supported by resilient domestic consumption and sustained infrastructure development. A relatively low exposure to US trade tariffs has also helped us cushion the economy from global disruptions. According to S&P Global, India's GDP is poised to grow at 6.5% in FY26, driven by robust service-led exports, particularly to the US, which are expected to remain firm despite potential trade headwinds. On the monetary front, S&P anticipates that RBI eases rate by 50 basis points in the financial year, with softening food inflation and lower crude prices expected to bring inflation closer to RBI's 4% target by March 2026. This would create further room for policy support. A recent report by Morgan Stanley also reinforces India's relative strength in Asia. With a lower dependence on goods exports as a share of GDP, India remains less exposed to global trade shocks. The report highlights the government's proactive fiscal and policy measures as key drivers in reviving domestic consumption and investment, critical to the sustaining growth momentum in the medium term. In parallel, technological self-reliance is becoming a cornerstone for India's long-term strategy. India has developed its first indigenous MRI machine, which is expected to be installed at AIIMS Delhi for trials by October. Inox India has played a pivotal role in this initiative by manufacturing the country's first indigenously designed 4K helium cryostat for MRI magnet system, making a significant step in reducing medical device import dependency by 80 to 85%. This was achieved under MOU signed with Samir, with support from Ministry of Electronics and Information Technology. Additionally, in the nuclear segment, India recently signed a deal enabling to transfer of the unclassified small modular reactors technology. This opens up new opportunities for domestic firms. Inox India is expected to benefit from this development, particularly through the setup of multi-process vacuum-jacketed transfer lines and other specialized cryogenic equipment, key components in installing advanced nuclear infrastructure. At Inox India, we are proud to contribute to this transformative journey through our expertise in cryogenic storage, hydrogen handling, advanced cooling technologies, and robust solutions supporting SMRs and fusion energy. The Union Budget announced this year also emphasized on a strong commitment to energy security by inviting private players to invest in this segment, and we look forward to playing a pivotal role in shaping India's clean energy future. Amidst the mixed global economic signals, the fourth quarter and the full financial year concluded on a very strong note for Inox India, marked by robust top line and bottom line growth, even from a sequential perspective. Solid execution and consistent order inflow across all business segments drove this performance, enabling us to successfully meet the full year guidance. The orders secured during the quarter further strengthen our leadership position as a provider of next generation energy and cryogenic solutions. For the fourth quarter, we reported revenue of 380 crores, EBITDA at 95 crores, and profit after tax at 66 crores. Coming to the segment-wise performance, I will begin with our largest business segment, Industrial Gas Solutions. The inflow of orders in industrial gas vertical during Q4 FY22 grew to 25.5% to 251 crores, buoyed by few prominent export orders as well. We achieved a significant milestone by securing an order from Australia for oxygen, nitrogen and CO2 IMO containers. Our first of its kind, while positions us a direct competition with Chinese manufacturers. This breakthrough not only marks our entry into a new competitive space, but also validates our long-term strategy of targeting major IMO containers contracts. The order comes with a challenging delivery timeline of under 6 months, and we are fully committed to meeting it, showcasing the enhanced capability of our Saudi plant. Our disposable cylinder business also recorded a strong performance during this quarter. Notably, we received substantial orders from the US client. These wins are particularly encouraging as they were secured despite the introduction of tariffs in February, underscoring the resilience of our positioning and continued demand for our products. The US market continued to face structural shortage of disposable cylinders, with demand exceeding the local production by 1.5 to 2 million units. While tariffs presented a potential headwind, discussions with our major clients in US indicated that rising steel prices and inflation have also increased costs for US manufacturers, helping us to maintain our competitiveness. We have also made notable strides in our industrial gas segment, particularly with the development of specialized liquid helium containers known as helium Diwar. While initial volumes were modest, we expect demand for this product to scale meaningfully in FY26 as the market matures. In ethylene oxide transport space, we successfully converted 6 trucks for logistics supplies and have already secured another 25 additional truck conversions this quarter, signaling sustained demand in this niche application. Additionally, we completed the delivery of 9 tanks to USA for semiconductor applications, further reinforcing our growing presence in this strategically important sector. Overall, the quarter reflected not only solid performance across our established business, but also encouraging momentum in new and high potential areas. Moving to the LNG segment, during the quarter, Inox India achieved a significant milestone by securing order of 36 number of IMO 40-feet IMO containers from a US-based customer, making our entry into new promising market segments. In parallel, we are actively supporting the adoption of LNG as a cleaner fuel for Indian Railways, having received orders for LNG fuel system for locomotives. This initiative is aligned with broader efforts to reduce reliance on diesel and coal. 2 of these systems are already operational in Gujarat, and construction of 4 more is currently underway. Our LNG fuel business is also gaining strong traction. The newly developed Gen 2 fuel tank has been successfully installed and commissioned, and we have received requests from major OEM manufacturers for supply of more than 1,500 units to be delivered in FY26. Additionally, we are in discussion with Maharashtra State Road Transport Corporation through their conversion partner for changing their bus fleet to LNG. While there have been some delays, we remain optimistic about the order's finalization, especially since our conversion technology has already been successfully demonstrated on MSRTC buses. To facilitate the transition to LNG fueled vehicles, the development and refueling infrastructure is a key. MSRTC is planning to establish LNG fueling stations, and private players like Green Line are also making substantial investment, with plans to set up around 100 new stations over the next 2 to 5 years. This growing ecosystem is encouraging, especially as OEM increasingly recognize LNG as a viable and environmentally responsible alternative fuel in line with evolving ESG norms. In a notable milestone, Inox India has become the first Indian company to receive the IATF 16949 certification for cryogenic fuel tanks. This globally recognized quality certification is a mandatory requirement for automotive OEM suppliers and underscores our commitment to the highest manufacturing standards. It also firmly positions us as a pioneer in the integrating cryogenic technology and automotive applications, especially in the growing LNG fuel tank space in India. Importantly, it opens doors to participate in the global heavy-duty vehicle fuel tank market, a significant opportunity for future growth. Now moving to the Cryo-Scientific division, the quarter, a historic milestone with successful installation of India's first indigenously developed MRI machine at AIIMS Delhi. This pioneering effort, supported by Samir and the Ministry of Electronics and Information Technology, marks a major leap in India's medical technology capabilities. The initiative has been widely praised for its potential to drastically reduce the cost of MRI scans and significantly cut down the country's reliance on imported machines. This accomplishment not only reflects our technological strength, but also our commitment to advancing self-reliant healthcare infrastructure. In parallel, CSC continued to expand its presence in high-impact scientific and aerospace applications. We have secured a prestigious order from Rockla University of Science and Technology in collaboration with FAIR project in Germany for construction of feed boxes, transfer line, and for advanced physics research. Additionally, we are deepening our engagement with emerging space startups, including a recent order for prototype testing equipment designed for high-pressure kerosene as a rocket fuel. These collaborations are part of our broader vision to support cutting-edge research and innovation, positioning Inox India as a key partner in the evolving science and technology ecosystem. The stainless steel cake division has gained significant global recognition, marked by our recent achievement of AB InBev global certification with an outstanding score of 98%. This accomplishment highlights the superior quality and safety standards of our products and places us in a strong position to secure orders from AB InBev breweries in Africa, Brazil, and many other countries. In addition, we have received approval from Paulaner Brewery in Germany and are in the final stage of obtaining approval from Heineken, further strengthening our presence in key international markets. Back home, the Indian beverage sector is witnessing rapid expansion, with major players like AB InBev, Carlsberg, and Heineken announcing substantial investments. This has led to surge in the demand for beer cake as breweries scale up their capacities to cater to the growing market. Our own production has reflected this growth, with the cake volume surpassing 50,000 units over the past year, catering to customers across US, Europe, and India. These developments not only validate our capabilities, but also reinforce our position as a trusted key supplier in the global market. I am also pleased to share that the Sauli plant is now fully commissioned and has surpassed 200 crore turnover in its very first year of operation. This performance includes revenue generated from cryo shop, stainless steel cakes, and vacuum vessel thermal steel panels refurbishment. As we move forward, we are focused on maximizing the plant's capacity with current projects including fabrication of storage, transport and IMO tanks, and the manufacture of equipment for air separation units. Regarding the recently imposed US tariffs, we are carefully assessed the impact and expect it to be very minimal. Demand for disposable cylinders remain robust, and the tariffs are not expected to significantly affect our price competitiveness. Our cake business will largely remain unaffected given the absence of major US-based cake manufacturers. There may be a slight effect on our standard tanks, but this is largely offset by a non-compete clause that remains valid through the end of 2028. Overall, we expect only a small portion of our US exports to be impacted. Looking ahead, we are optimistic about FY26. We are targeting revenue growth of around 18 to 20% while maintaining the strong EBITDA margins in the range of 22 to 24% and PAT margin of 15 to 18%. Segment-wise, we anticipate 16 to 18% growth in IG sector and over 20% growth in LNG and CST. Our stainless steel keg division, though relatively new, is also expected to become a meaningful contributor to our top line. Our growth in FY26 will be driven by multiple factors. In the IG segment, we are focusing on emerging opportunities across helium, hydrogen, semiconductor, and ammonia applications, along with equipment for air separation plants. The expansion of steel industry and rising investment in semiconductor manufacturing are creating a strong demand for industrial gases, which we will be positioned to meet. Additionally, the global push towards clean energy has intensified interest in hydrogen storage and transportation, where we actively engage through ongoing projects and customer inquiries. Coming to the few important quarter business numbers, order book as on 31st March 2025 was 1356 crore, with 47% from industrial gas, 36% from LNG, and 17% from cryoscientific division. Exports comprise 64% of our total order backlog. In terms of segregation, 16% of the income has come from IG, 19% from LNG, and 16% from cryoscientific division. Total order inflow during Q4 is 364 crore, comprising of 69% from IG, 20% from LNG, and 11% from cryoscientific division. Concluding my speech, I would like to reiterate that we are optimistic about the growth opportunities in all the segments that we cater to, and we expect to continue our growth trajectory in FY26. With the successful commissioning of Savli plant, landmark win in global market, and strategic strides in LNG, helium, hydrogen, we are entering FY26 with a solid momentum and confidence in our ability to sustain growth and deliver long-term value. I would like to thank you all for your patient hearing. I now hand over to Mr. Pawan Logar, our CFO, who will share the financial numbers in detail with you. Thank you so much.
Thank you, Deepak, and good morning, everyone. I shall share summarized financials for the quarter as well as financial year ended on 31st March 2025. Let me share the numbers for Q4 and FY25. The total income for Q4 was 383 crores, which grew by 33% YOY. The EBITDA was up by 52%, stood at 95 crores. Our quarterly PAT grew by 55% to 66 crores. The total debt at the end of FY25 is zero, which provides us adequate room to raise debt in future. Coming on financial year 2025 number, the FY25 income stood at 1,354 crores, grown by 16.2% YOY. The EBITDA grew by 18.3% to 330 crores. PAT grew by 15.4% to 224 crores. The company has comfortable debt case surplus of 261 crores as on 31st March 2025. That concludes my update on the financial highlights of the company. I shall now request the moderator to open the door for questions and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Kapadia from Spark PMS. You may proceed.
Thanks for the opportunity. Couple of questions from my end. On the revenue side, on industrial gases, you alluded to, growth coming from semiconductor and, momentum is strong. So can you share, any new potential orders or contract wins which we would have received, which can, drive growth higher on the domestic side for revenues, and what would be the split between exports and, domestic for the IG division in terms of FY25 for the year as a whole, if you have that ready? And second, on the LNG side, what is the, status update on, Adani Total terminals? I think 16 terminals orders were given. There was a target of, 50 terminals. So when is it likely to happen? And, government side also, what is happening? I think 50 stations, the tendering was over. Government obviously has longer term plans of, 1,000 stations. So where are we in terms of execution, tendering? And, on the LNG side, how does, the OEM supply or any visibility or further development come on the LNG tank? So those were my questions on the revenue side.
There are 2-3 questions in one question, but okay, I will answer those. On semiconductor industry, yes, we are very hopeful that this segment is going to grow very rapidly. As you know, there are 4-5 more plants are coming up in India now. And after our successful completion of tanks for US customer, we have supplied in the last quarter. We have recently received order from Tata project in Assam for semiconductor supply of tanks. And as you know, these tanks are very critical from the supply because the cleanliness is very important. So we have been supplying similar tanks to the other countries way ahead present requirement. And semiconductor is really going to be a very strong in India, and we are very much hopeful that more and more industrial gases will be required for the semiconductors, and we will get a good number of orders for storage and transportation of these equipments. On the LNG front, yes, what you rightly said, 1,000 stations were declared by Government of India way back. And last quarter, we said around 45 to 50 are now installed or commissioned or in the process of commissioning. And in last quarter, we have seen around 8 to 10 number fueling stations getting added. Mainly the new additions have come through the private players and few of the PSUs. So the growth is happening. The installations are there in the on the Golden Quadrilateral. And if you see the LNG fuel tank requirements by the OEMs, that is substantially increasing in the last few months. Knowing that now there are fueling stations available on the main highways. So we are seeing a great requirement coming from OEM manufacturers, and we are ready for supplying equipments to them. And all our tanks, what we have supplied, has very successfully performed at most of the places. And we are very hopeful that this will give additional growth for LNG market.
Yeah. And on Adani Total, any updates?
On Adani, we have commissioned so far 7 such fueling stations, and balance are likely to come in coming quarters. They have plan of 25 such stations. Out of that, 7 are now completed.
Okay. I'll join back the queue if I have more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Jaiveer Shekhawat from Ambit Capital. You may proceed.
Sure. Thanks for taking my question, and team, congratulations for a great quarter. So first, I wanted to understand on what's been happening on the order intake side. So I see that I understand last quarter you had received the Bahamas, which was a large order. But even prior to that, the order intake this quarter is equal to the second quarter order intake. So in light of that, what sort of one gives you the confidence to achieve the growth guidance that you've guided for? And possibly I'll take my question after that.
Yeah, our order book is in the fourth quarter was good, and though because Bahamas was a big order, so slightly in the quarter 3 there was a jump in order book. And going forward, definitely all these new segments in IG sector, we lastly also told that steel industry, healthcare industry, ammonia, hydrogen, helium, these are the growth drivers for us. and we expect very good business in this area. The steel industry is growing very fast in India. Many projects are coming in. So rather, we don't only supply to the manufacturer tanks out of our factory, but we also started fabricating flat bottom tanks at site, and several such sites are under progress. So we have very good orders in hand for the steel plants. Besides that, in LNG market, yes, we are seeing very good potential for the small scale LNG units, as well as fuel tanks for the buses and trucks, and many fueling stations, satellite stations for the variety of applications. As you see, the ESG is getting more and more forward. So we will have definitely, because of this ESG initiative, everybody wants to grow, use the clean fuel, and LNG can be the only substitute as on today. So we feel that with all these initiatives which are coming up, at the same time, the Cryo-Scientific division, we are getting very good orders from all over the world, especially from ITER, CERN, Roost, and so many other organizations. So we are quite confident that whatever we have achieved last year, we will grow at least 17 to 20% on the revenue for the next year.
Sure. So that's very helpful. I think second, I wanted to pick your brain on the entire LNG conversation that we are having. Now, we have been speaking with some of the auto OEMs trying to understand their unwillingness to sort of invest into making changes. I understand there has been some pickup that you have seen over the last few months, and there has also been some pickup from the oil PSUs and the government side as well. But I think it's been slower than what one would have earlier anticipated. And now there is also the discussion around EV adoption as well that might happen eventually on the MHCV side as well. So do you think the oil PSUs structurally are incentivized to put in such amount of large capex to invest into these LNG fueling systems? And then at the same point of time, even the automakers, because it seems as if the Indian opportunity does not seem that exciting. We might even rely on imports of LNG as well. But possibly the international could be something that sort of play out very well for you. So just want to understand your thoughts there.
Yeah, if you really compare the EV and the LNG, okay, so whatever is our experience, not only in India, but rest of the world also, for heavy duty and buses, EV is not so powerful, so demanding in my opinion. Basically because it has got a limited kilometers what it can travel. So maximum it travels say 300, 400 kilometers in one space. And then it has to go for charging for at least 3 to 4 hours. So whereas this truck, they have to travel minimum 500, 600 kilometers in a day. And deliveries are so, short deliveries are there. So they now keep these two drivers. So they continuously run the truck. So presently, our 450 liter one tank installation can go to almost 450 kilometers. And if they install two such tanks, then 900 kilometers. And recently, if in Auto Expo in Delhi, one of the OEM manufacturers has put 990 liter two tanks. That means almost like 1,000 kilometers in one stroke once you fill there. So that is what is this LNG. And secondly, the power you get with LNG is substantially higher. So looking, and the availability also now, more than 58 stations are there now across the Golden Quadrilateral. Every 300, 400 kilometers, there is a station now. So we don't have to really see. And with these two tanks on one truck, people are so comfortable that once tank gets emptied, another 450 liter is available for him to drive on the road. And once he sees the petrol station or a fueling station, he can fill up that tank. So that fear of I will go out of my fuel is not there, which is always with the EV batteries and trucks. So this is what is helping us. And the signals what we are getting from OEMs that they are really gearing up to start their production of LNG vehicles in a big way now.
Got it. So this is very helpful. Wish you all the best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities. You may proceed. Hello, Nidhi ma'am.
Hello, am I audible now?
Yes, ma'am.
Nidhi, yeah.
Yes, thank you. So I have, thank you for taking my questions. I have two questions in particular. Firstly, on the beer kegs, I know you mentioned that you are in advanced stages of approval for two players internationally. But other than that, I sort of wanted to understand how we expect this beer keg opportunity for us to grow in the upcoming 3 to 4 years, given what we have seen so far in the approval stage for exports, and domestically also you mentioned that there are a couple of expansions happening. So with this, how do we expect this entire space to play out? That is my first question. And the second would be on exports. So we've seen over the last, say, 1 year, every quarter we've had, some type of container shortage or, say, US tariffs, things like that. So how do we expect the upcoming year to pan out in terms of exports, and the situation for containers? Has it gotten any better since say Q2, Q3, and do we expect any disruptions in container availability anytime soon, given the geopolitical situation?
Yeah, Nidhi, very good questions you are asking. The one first is like beer kegs. As you know, I briefed you, all of you, last time as well. There are almost 120 million kegs available in the market, and there is 4 to 5% of replacement demand in the market every year. So almost there is a 4 to 5 million kegs required in the market every year. And the present manufacturers in Europe and maybe China have a capacity to produce around 3 to 4 million kegs. And there is always a shortage of 1 million to 1.5 million kegs in the market. And the basic purpose of that was putting our plant was to cater to this demand. Because from the logistics supply point of view, European countries cannot supply to, or it is difficult for them to supply to Middle East, Southeast, India and other countries. Okay. And presently we have installed our capacity of 300,000 kegs a year. And last year we produced almost 50,000. And as you see, the market is growing very fast. In India, there are 3 main breweries, AB InBev, Carlsberg and Heineken. And we have received global approval from AB InBev, and now recently last week only we have received approval from Heineken. So the only Carlsberg approval is pending, which they have planned to come to our factory for audit in the month of August. So once these 3 certifications are there, global approvals are there, we think that we will be very well placed in the global market. And India, as you know, that recently these 3 majors have declared investment of almost 3,500 to 4,000 crore new capex investment in coming year. And definitely there will be substantially of that portion will go into the plant manufacturing as well as the facility for dispensing, that is through kegs. So we have potentially very good market. We have supplied to almost everybody in India, and whatever the products we have supplied, people are very happy. So we hope that once their facilities are expanded and they are ready for taking beer kegs, definitely they will call us and give the orders to us. On the export front, the container shortage is no more now. It was there in the first and second quarter, but third quarter it started streamlining. And now the fares are also come almost similar to the last year pricing now. So there is no such issue. Our exports traditionally are more than almost 50-55% every year. We continue to get that orders in export in coming year as well. And on tariff, yes, we have 3 products which we explained you, that one is our major exports to US is to disposable cylinders, and in disposable cylinders, our competitors and other manufacturers there in USA, they have limited production capacity, and hence the major users in US have to depend on other sources. And there we are very well placed because of the zero anti-dumping on Inox India. At the same time, because of the local inflation, which is going to be very high this year in US, at the same time the steel prices going up. the delta between our cylinders and the locally available cylinders will remain the same even in spite of the tariff additions. Secondly, on the cake, there is no such manufacturer available in US, so we don't have to worry that a local manufacturer will gain that order. So we can supply on a regular basis. Slightly, there will be slight impact perhaps on our cryogenic tank business, but that is very marginal because we have non-compete clause till 2028. So anyhow, we cannot supply the tanks or stock the tanks in US because of this. So by that time, something more effective and more so good solution we'll find in due course of time.
Thank you. Lastly, I just wanted a follow-up question on the beer kegs. What is our, say, price competitiveness with the Chinese players? My question comes mainly from the line of, if they ramp up their capacity tomorrow to cover up the shortage, would that mean that our market would eat into our share or of exports? That's the angle that I am sort of looking at.
Yeah, you are true. I mean, our prices are competitive and not lower than Chinese, but competitive pricing. And as you know, still in Europe and US countries, Chinese products are not favored rather. So we have better chance. And earlier it was China plus one. Now people are only looking at India. So with that advantage, definitely. And our product quality, there are many companies in China who don't have these certifications even. And a lot of anti-dumping duty onto the Chinese kegs are there. So with all this, we definitely hope that India will have a better chance to sell the beer kegs into the Europe and US market.
Thank you so much.
Thank you, Nidhi.
Thank you. The next question is from the line of Ishwar Arumugam from iThought PMS. You may proceed.
Hi, sir. Thank you for taking my question. So, sir, Charles Industries, they have reported that they have started delivering LNG fuel tanks to Volvo Eicher. Are we losing market share to other players in the LNG fuel tank division?
See,
from either China or the US?
This market is a big market. And so I told you that India produces almost 4 to 5 lakhs of trucks and buses every year. So even if all the three OEM manufacturers will say 10% of their production goes to LNG, which will be around 40,000-50,000 fuel tanks will be required. And definitely everybody has this thing that they can try different this one. As you rightly said, Volvo has tried char tanks, but their prices are much higher than our tanks. And we are in discussion with them, and sooner or later we are 100% confident they will come back to Inox India.
Understood, sir. And also I wanted to congratulate you on the indoor trade in the US order. So I wanted to ask, what is the wallet share that we can gain with this client, as the project is said to be worth around $15 billion US. And also the same company is investing in India as well for a semiconductor project. Are we expecting to win that order in India? What could be the potential of
the semiconductor business looks to be very promising to us, and we are not getting any chance that we are losing any business on semiconductor if it comes on our way. And besides this US company, what we have supplied, the 9 tanks ranging from 50 KL to around 200 KL. Recently, we have received order from Tata Semiconductor Complex in Assam. And that will be supplying in this financial year FY26. So whatever the opportunities are coming for variety of gases, our parent company, Industrial Oxygen, Industrial Inox AP is putting their efforts to see that they grab the order. And definitely we will supply most of the storage and transportation equipment to this industry. And even we are thinking that we'll go for manufacturing of different piping speeds and other things for the semiconductor industry. So as the market grows up, as the requirement comes, we are really geared up to take that market head on. and we are confident that we will do substantial product development for this industry in coming few years or few months.
Understood, sir. So my last question is, while our results are very strong, we were confident of Q4 being above 400 crores, the last calls, and FY25 growth being around 18 to 20%. So I just wanted to know if there has been any slowdown in the offtake this year compared to your expectations.
Very well said, and I was expecting this question from some of you. I really said last time, ab ki baar 400 par. But somehow, I mean, we are set up with, say, around 385 or something. Basically, we had again this, you say, February and March. This tariff has really disturbed everybody. We were almost having ready tanks available at our shop, almost 2 to 2.5 million. And people were just waiting because they were confused what to do. So we had some issues with the customer that we said, okay, we have never said we will be paying the additional duties and all that. So we started negotiating with them. Few of them accepted, okay, whatever duty it will come, we will pay. And few said our plants are not ready or our sites are not ready. So we'll wait and watch what is going to happen. And this has really had an effect on our final numbers. But we are almost close to 400, which you should appreciate. And if that few numbers were increased, almost like though we have said around 17 to 20, we would have reached around 17.5. But small plus minus here and there, it happens. And I think 16.2% is not a really low number for the revenue from growth, in my opinion. But yes, rightly what you said, right, there is a deviation to that.
That's all my questions, sir. Thank you so much for your time.
Thank you.
Thank you. The next question is from the line of Dipesh Agarwal from UTI AMC. You may proceed.
Yeah. Good morning, gentlemen. I hope I'm audible.
Yeah.
Sir, if I look at your balance sheet, there is a substantial increase in receivables and contract assets versus a March 24. What is this?
Yeah, actually, this contract assets is this percentage completion method. You know, our order book is increasing and a lot of project orders are coming now. And in project orders, we are getting the payment according to the payment terms, and due to that, we have to pay according to India's rules. That's why this amount is in contract assets. And order book, because of project order book increasing by more than around 1,000. That's why this is there.
Would it be fair to say there has been a substantial advantage against them because other liabilities are also up substantially?
Yes. That's why, you know, if you see the advance from customers, that is also increased from 252 crores to 387 crores. And the basic reason is that, yes, contract asset amount is also lying in this. So until the billing is there, we cannot reduce the advances. That's why it has come in the it is shown in contract.
Okay, sure. And if you can share what were the revenue for the year for beverage kegs and disposable cylinders, and what is the expectation for FY26?
What's your question?
What was the revenue for the beer kegs and disposable cylinder in FY25, and what is your expectation in 26? And are they also part of your order book?
Yeah, we did almost like how much we did? Disposable is 129 crore. Disposable is around 129 crore, and stainless steel kegs with 26 crores last year. More than 50,000 kegs were sold, and we are billing 252 crores this into FY26. As we have got.
Sorry, your voice was not clear. Beer kegs was 23 crores for the year.
Beer keg we did 27 crores in FY25.
Okay.
Last year, and basis, we are expecting almost 700 crore sales, as we have got the approval from AB InBev and NCN now. And with this, we expect that more and more orders will start coming in, because these are global approvals. So once this global approval is there, any country can start placing orders depending on.
Okay. Sure. Thank you. That's it from my side.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Dhruv Shah from Dalal and Brocha. You may proceed.
Yeah, thank you for the opportunity, sir, and congratulations on good set of numbers. So my first question is, in the last quarter you had mentioned that for our liquid air energy storage system, Highview Power is looking at 3 to 4 new additional plants. So do we have any updates on that? Have you received any order wins over there?
No, we have not received any order, but we have bidded for 3-4 projects which are in the pipeline, and we are awaiting for their confirmation. But definitely, with our progress on the first order they have placed, they are extremely happy with the services we have provided, our engineering inputs we are providing. So we are hopeful that once they decide, they will come back to us.
Sure, sir. And for the full year FY25, what has been the revenue contribution from the US? And if you can share the percentage of your order backlog coming from the US?
So US mainly we have a requirement from disposable cylinders, small amounts from keg, and a few tanks which we directly sell to the customers in US, and it is almost like around 8 to 10% of our revenue. Overall?
Yes, 10.
Sorry, sir?
The overall revenue is from US customers is almost 8 to 10% of our total revenue, and we expect similar or higher, because the disposable cylinder requirement is coming up very fast now, and there are many such projects which are requiring now LNG equipment as well, because of this present situation in the US market. So we are hopeful that we'll be getting more orders from US this year again.
Right, sir. Thank you. And so one last question regarding your Australia orders that you receive for oxygen and IMO containers. The delivery you mentioned is under 6 months, right?
Yes.
And what is the order value?
Order value, just a minute.
Australia
Order value is around 21 crores.
21 crores. Sure.
Yeah.
Thank you so much.
Thank you. The next question is from the line of Rohan Vora from Envision Capital. You may proceed.
Hello, sir. Congratulations on the great set of numbers.
Thanks.
Sir, my first question was on the LNG part of it. So, any LNG terminal project, that is in sight, where we've bid or the discussions are on for the next year, where we can potentially receive order that you are looking at. That was one. Second was, I was also trying to understand, because I read that, Inox Air Products is supplying its air products to the semiconductor plant in Dholera. So have we made inroads there, and what would it take for us, or how is the competitive intensity there? I mean, are we going to be present there as well? So that was the two questions that I had. Thank you.
Yeah, the Dholera project, the land is acquired by Inox Air Products, and they are just setting up their requirements, what equipment they will be requiring. And once, as this is our parent company, and definitely whatever the equipment, storage equipment, transportation equipment, or IMO containers will be required, definitely we will work on those projects, and we are sure that we'll go get those orders. So that way we don't find any difficulty. And semiconductor market is growing. We recently also received order from Tata project in Assam as well. So we are hopeful that whatever efforts we are putting in the semiconductor industry is going to be very beneficial to us for our top line as well as bottom line. Because frankly, there are no manufacturers to the specification of semiconductors as on today in India. And going forward, we have been in this industry way back when we supplied equipment to semiconductor industry in Japan and Singapore. So we very well know the requirement of this industry. So we are very confident that we'll get majority shares as the semiconductor industry grows in India.
Sure. And so the first question was on the LNG terminal. Any orders in sight or we bid for?
We already had the order of Bahamas, which is under progress. Almost 50 to 60% engineering work is over. Almost 30% material has received. 30% of the total project material has also been received. So we are very much on track for the Bahamas project. The production has started. We have already bidded for various upcoming projects in Philippines and Indonesia and Andaman as well. So there are 3-4 more opportunities which are coming in this LNG terminal, and we are 100% sure that we will quote and will have benefit into these new projects once they are decided.
Thank you, sir. All the best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Kunal Bhatia from Dalal & Broacha Stock Broking Limited. You may proceed.
Hi, sir. Thank you so much for the opportunity and congratulations on a great set of numbers. Sir, I had a question in terms of, so you have given your order book, but currently, what would be the status of your order pipeline? What is the total order pipeline you are looking for FY26 and 27?
So the order backlog, we are having almost 1356 crore as the backlog we are having. And normally, on an average, around 350 to 400 crore order we receive in every quarter. So that momentum we are going to maintain in coming years. So we don't think whatever targets we have set for the revenue for 27 and 28 will be 100% on our course to see that we accomplish this target some year.
And sir, any large project like the one we did for ITER in the cryoscientific division, any large project we are expecting going forward? So if you could give some details on that.
Expecting maybe first or second quarter. Declare it to me.
Sorry, your voice was not clear.
I am saying in the quarter 1 or quarter 2 of FY26, we are sure to get one big order from the scientific community worldwide, and we are confident that we will win this order as we have done a very good job for them in the last few years. So we are sure that this contract will come through. And we'll let it come.
So by big, you mean to say, will it be bigger than the ITER one?
Not because ITER was the initial project was very big, but it will be substantially big.
Okay. Fine, sir. I'll get back in the queue.
Yeah.
Thank you so much.
Thank you. Your voice is feeble.
Hello, sir. Hello, sir.
Yes.
Yes. Thank you. The next question is from the line of Kenneth Mendonca from TCG AMC. You may proceed.
Hi, good afternoon, sir, and congratulations on a good quarter. So my question was for the LNG segment. Could we get the breakup in terms of domestic and export revenue And within domestic, I wanted to know how many terminals we have commissioned in FY25 and the revenue from that.
No, in domestic, there is no such terminal we have commissioned. What we did was Scotland earlier, then Caribbean, and now we are doing Bahrain. And we projects in Indonesia and Philippines now, bit for Andaman. The project, there's background noise is there. Hello? What's the background? So we have not done any project for a terminal in India as on today.
So I just wanted to clarify. I meant the stations in India.
Fueling stations, you mentioned?
Yes, fueling stations. How many stations we did and the revenue from them for FY25?
That number is not ready with me, but in total, so far 58 stations are there. So almost 60 to 65% of these stations are installed by us. And in balance stations where we have not won the full contract, we are supplying the storage equipment, dispensers and cryo lines and the VJ lines. So in almost all 58 stations, we have some part of the equipment we have supplied. Almost 60% we have supplied fully.
Sure, sir. And so the breakup in domestic and exports for LNG revenue?
Number? LNG 60-40? Around 60-40.
Sure, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Ashutosh Parashar from Mirabilis. You may proceed.
Yeah, hi sir. Thank you for the opportunity. Vipin Goyal this side from Mirabilis. Sir, I had a question on LNG. Although you just alluded to it in the last question. I just wanted to know your estimate and your guess on this, that how many stations, given our order win rate and the pace of tendering, can we expect in this year? In terms of the number of stations, what do you think would be an ideal number to estimate for the current year?
So normally, whatever we have passed, almost 8 to 10 stations are coming every quarter. Nevertheless, recently MSRTC and Ultra, they have sent a very good number, almost more than 100 stations to finish within the next 5 years. That is the progress. But on an average, in a quarter, around 8 to 10 stations are getting installed.
Hello, sir. Sorry to interrupt you, but your voice is cracking.
Really?
Yes, sir. Now it's perfect.
Why it has happened like that? Okay.
Yes, sir.
So what I told you, each quarter, normally 8 to 10 fueling stations are getting added. And recently, if you have seen, the MSRTC and Ultra a very ambitious plan of putting stations for 100 number 2 to 5 years. On and about 1,000 stations already delivered by Government of India. And mainly PSUs like BPCL, HPCL, is contributing to the stations. So this is what the present state of the fueling station. But more or less, on average of the golden quarter, at distance of 400 to 500, now the stations are available for fueling.
Got it. So what 40-50 pumps per order wins per year can we estimate for a year? That is one. And also another question which I had was on this. A similar question on this is, how many stations are there as of now in the current order book which are under execution?
In current execution, almost around 7 to 8 are under current execution. And one big order from Petronet is there, which is because of some land issues, they have just pulled up for some time. But we are producing on the equipment and just waiting for the final clearance for dispatches.
Got it. Okay. So second question which I had was on the tariff comment that you made, the impact on tariff in the last quarter, in the last few days of the quarter. So can you give us an insight as to, let's say, what type of customers who are coming to you for renegotiation based on tariffs? So any kind of commentary on the customer profiling, or is it like on the disposable side or any other industry?
It was not.
You want to classify?
I said disposable is not a major concern to us. Only concern was on the industrial gas equipment. So normally we are supplying industrial gas equipment directly to the customers, and they have placed the order. So almost like 2 million or 2.5 million equipment were ready for dispatch in February and March. However, some have given consent. Okay, whatever the tariff is there, we will, as soon as we receive the vessels, we will pay for that and get the equipment cleared. Whereas few where the sites were not ready or the project were delayed, they were just taking a chance. If suppose something gets reduced or something gets more clarity better later on. So they are just kept it under hold for some time. But mostly now it will be getting cleared. So those were the few tanks which are around 2 and 2.5 million, which we have to hold up because of this sudden impact of this tariff issues in US.
Okay. So safer to assume, like if you were to classify this industry, there would be like more on the standard pump side and not on the custom.
Ashutosh sir, may we request you to return to the question queue for your follow-up questions, as there are several participants waiting for their turn?
Yes, sir. I'll back in the queue.
Thank you.
Thank you.
Thank you. The next question is from the line of Bimal Sampath, an individual investor. You may proceed.
Yeah, good afternoon. Two questions.
Yeah.
One is, what is our capex for the current year, FY26? And second, I was told, I just heard in the market that whatever this tanks for automobiles we have supplied, there has been some issue and we have recalled some tanks and replaced. Can you explain more on that?
Yeah. Yes. We had some operational issues at the fueling station, as well as some equipment had some issues. So we have recalled those few tanks, and we have supplied and we have developed a new generation LNG fuel tank, and it is supplied to major OEMs now. And the initial trials are very, very encouraging. So whatever the small issues were there in the operation side, because this is a new technology as such. The fueling stations are new, the people are new, the operators are new. So all such infrastructure is getting developed for this fuel tank. So these were operational issues, and few were related to our equipment as well. So we have plugged those issues and fixed all the problems. And whatever we have produced the new, they are working fantastic. No issues now.
Okay. And what is our capex? And
it will be around 80 crores for this year, FY24.
This high-rail, the 3-4 projects, what is the quantum value of, if we get the orders, what is the value of those? Because they had mentioned they are bigger than what was, what has been ordered. Yeah.
Very, not right for me at this moment to tell you the numbers, but the projects are almost 5 to 6 times bigger than the present project we are executing.
Okay. Thank you very much.
Yeah. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. You may proceed.
Yeah, sir. From a slightly futuristic point of view, so the next 3 years, which are the bigger opportunities or which are the bigger sector areas which will generate growth or a larger business for us?
So the major opportunities that are going to come is in the LNG and cryoscientific division. So whereas the IG sector definitely will have a good growth because of hydrogen, helium and ammonia and other sectors. But the major jump will come through the LNG prospects in India as well as in foreign countries. And cryoscientific division, especially we are expecting, the government of India has declared the third launch pad for the space department, which is a very big project. So we'll be bidding very aggressively for this project as well. So these are the few important projects which are coming up. and many other projects in the big science projects are there all over the world where we are bidding. And as you know, there are very few manufacturers in the world for type of projects, and Inox India is one of them. So our chances are much better as compared to our European and US competitors.
So from a mix perspective, we will see a slightly higher share coming from LNG and cryogenic versus industrial over the next 3 years. So that's the one indication.
Yeah.
Second is when it comes to industrial, so the linkage incrementally or historically or incrementally has to do with the industrial activity, right?
Yes.
Barring hydrogen, which is a newer area which gets added. Otherwise, whatever is the industrial capex, in chemicals or any other manufacturing link is where the industrial gas growth linkage should be developed?
Yes, always. See, basically, the major additions are coming up in the steel sector now. Yesterday, I was still is putting a 40,000 crore investment for their new steel plant coming up in Maharashtra. There are many such private players who are interested to put the air separation plants. So that is going to be a big business because presently India has a capacity to manufacture around 178 to 180 million metric tons of steel, and by 2030 to cover almost 300 million metric tons. So that will be a huge demand for cryogenic equipment because of the expansion in steel industry through ASU plants.
So in industrial, which will be the biggest two sectors for us?
The biggest two will be steel and healthcare sector.
Okay. And my last question is on the cryogenic side. So here the linkage has larger share, will be space, right, in cryogenic?
Yes, space is there. A big science project like CERN or nuclear physics research, or maybe sort of the nuclear programs in Europe. These are the few big opportunities for us.
Okay. Sum total, what is the CAGR growth that you look at? Ma'am, I'm just completing the loop. Sum total, the CAGR growth, if you have to look at over the next 3 years, considering the discussion that we had, what it should be, sir?
Around 15%. Yeah. Around 15 to 20%, 15% minimum.
Minimum. Okay, sir. Thank you very much.
Okay.
Thank you. The next question is from the line of Pravesh from Four Line Capital. You may proceed.
Thank you for the opportunity and congratulations on great set of numbers. My first question is on what is your outlook for IMO tanks, given that's relatively high volume business globally. So if you can give any indication on monthly numbers that you're targeting later this year, 2 years out, etc. Even now we are competitive with the Chinese, as you mentioned, on the Australian contract. And the second question is on the adjacencies that you're looking at in terms of heat exchangers, valves, cold boxes, etc. So where are we on that journey? Thank you.
So IMO is a very big market, frankly speaking, but it is a very competitive market as well. So as we grow in this business, the numbers will definitely run very high. And so far, because of our space limitations, we were not in a position to take such bigger orders. But now we have a very good line in Savli we have established for such products. So we are very competitive now, and we are producing the equipment much faster than what we could have produced earlier in our old plant. So this business is a very big business, and it is mainly dominated by China. But what we have seen is, if we manufacture in a serial production, we can not directly compete, but we are just being league with Chinese, and we have very good reputation with the customers. So people prefer Indian products as compared to China products, even if it is 10-15% higher in price. So that advantage we are going to get. We don't say we'll produce in thousands, but yes, in hundreds definitely will produce in coming years.
Thank you. On the adjacencies?
On the heat exchangers and other things, and maybe The projects which are already in line, we are talking to several parties, and we are hopeful that in quarter one or quarter two, we will have some good orders in hand. And once it is coming, we'll let you know.
Okay. Thank you, sir. All the best.
Thank you. Sure.
Thank you. Due to time constraint, that was the last question. I now hand the conference over to the management for closing comments.
Yeah, extremely thankful to all of you for participating in this conference call, and very wide range of questions you asked. Hope we have answered to the best of our knowledge and the expertise we are having. And let us meet again after the quarter one is over, and we are very hopeful that whatever the targets we have set for the revenue as well as the margins, we'll try and achieve. And the market is looking very strong to us. Let's see how we can capture this. Thank you very much for attending this conference call.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you so much.
Thank you so much.